Hello, today is December 7th, and the market is rallying quite strongly today. We're up over 2% on the day. As you can see, this was yesterday's close and this just giant gap higher and move. And this syncs exactly with what we've been talking about for the last several days. You can go to this video we posted on December 2nd called Market Slingshot, and this detailed what we were thinking in that when implied volatility, i.e. the VIX, was very high, that means there's a lot of energy in the market, and it's kind of like a slingshot. When you pull a slingshot back and let it go, the farther you pull that slingshot back, the farther your projectile will go. Well, the more you increase vol, when that vol releases, the faster the market will go up. And as a result, we have this 2% rally in the market. Now, for subscribers, you can head over to this report that we posted on the morning of 12/6 that really digs into the meat of this, how high the VIX was. And, with the VIX at 30, that's predicting a sustained move of about 1.8% in the S&P. And obviously, that is very tough to maintain. So we outlined some of this. If you hit subscribe now, you can get a free 7-day trial. You can read this note. No risk to you to subscribe and to read that note. But essentially what we're saying is that when the VIX was at 30, implied volatility was just too high. It had to release, right? That implied volatility, that energy had to release, and that would manifest in a vanna rally, which is the market gapping up and shifting higher. So what's unique about this? Well, we made the calls that the market was due for a very strong rally. And now there's something interesting happening in that we had this release. There is a lot of trepidation around what the Fed is going to do, tapering, rate increases, timing, all of that. And the FOMC is next week. That's 12/17. So yes, we got the Omicron relief rally. Omicron, that COVID strain, doesn't seem as strong or as devastating maybe as initially thought. And so there's what we call a relief rally here. We outlined today in our report that we thought there was a lot of deleveraging, was some of the selling in some of the meme stocks and tech names that are more interest rate sensitive. So, that is what we saw as the fuel for this rally. And now we've popped higher. There's a couple interesting things we want to talk about, and we really want to focus on this next move. So let's focus just on today's chart. We're going to flip on our trading levels, and these are our key trading levels for today. And what you're going to see here as we zoom in is we had the gap higher at the open. There's a lot of gamma posted at 46.50, and once we pushed over this 46.50 gamma line, we've now entered into a definitive positive gamma state. So what does that mean? Well, that means that dealers actually now have increasing levels of futures to sell as the market goes higher, and as the market declines or goes down, they have a bit of futures to buy. So I want to just show some of these levels to show where the strength of those gamma positions are. So first, if you look at large gamma 1, that's our strongest gamma level, and you note that's at 4,700, and then there's large gamma 2 at 46.50. So these are two fairly strong gamma areas, right? And then we have combo, which is a combination of spiders and SPX. So there's these levels that are resistance, and we outlined this in our note this morning right here at 4,700. We have a bit of support here at 46.78, probably enough to hold us up today. And then a larger, if you zoom out a little bit, there's more support down here. But when you have this short cover rally, which is what this is, vol dropped, put buyers had to cover, people sold vol. That volatility vanna trade short cover is the same as if someone short stock and they got to buy back, their short position. You get a violent move higher, and there's really nothing underneath this. So our concern is that as we sort of zoom out a little bit, we're going to look at the FOMC, which is on next Wednesday. Volatility is going to hold into that event some, right? We can only sell off so much vol ahead of what is a contentious, Fed meeting. And so we've now formed something of an air pocket in here. And I don't think this air pocket can really release until Powell speaks next week. And sort of if he's dovish and the market anticipates that as risk on, then we'll get a continued very sharp rally into the end of the year. And if he, upsets the market, we'll obviously trade lower. And if we break really the 4,600 area, we'll see negative gamma pick up, which means that market makers and dealers may start shorting futures as we head lower. So don't read too much into this rally is what we're saying. This was a volatility short cover put closing rally, and now we've created a little bit of an air pocket in here. 4,700 is very strong resistance, and we think that this move is likely done for the day, and we're probably going to hold and grind in this area into next week's FOMC. So if you have any questions on that, please send us a message at SpotGamma on Twitter. You can post a comment in the section below, or hit us up, info@spotgamma.com. Thanks.
you.